Hello and welcome everyone to another weekly market commentary from StashAway. With us, of course, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hey, Philip. Good to see you.
Good to see you as well. I wanted to pretty much get right into it, right? We've seen this week and, big end of last week, actually, right? A little bit more volatility, or not even volatility, but down markets pretty much, right? Just wanted to see if we can together review those recent market swings and see really where they stem from, right? Because a lot of people were saying, of course, there's COVID, markets are getting to new highs, or at least back to break even from the beginning of the year. So they think it's kind of like a bubble, but maybe we'll take a look and look at that and maybe get your opinion.
Yeah, well, I think the media outlet has talked about it a lot, and something called the call options. And to simplify, is you pay a certain amount of premium. You can buy a short-term option to buy the market at a certain predetermined strike price. And if the market goes beyond that strike price, you join in the upside for the markets. It's a very leveraged form of play, because those kind of call options positions, when you're buying them, if nothing happens with the decay of time, you lose a lot of premium as you head into the expiration dates for those things. So normally this is the world where professionals operate in the world options, but it seems to us that retail investment platform has been democratized to a point where it has become a rampant amount of positioning over there. And can you imagine when dealers are on the other side, they are short the call option, and in the call option situation, when you are short, you have unlimited downside when the market goes up. There's no boundary for how much you can lose. So dealers would hedge by buying the underlying stocks itself at a certain ratio, of course, but they will start buying and hedging the position. So that was widely believed to be one of the big rampant reason why the market surged so crazily. And a lot of the call option positions were done on the NASDAQ, on tech-related names. So we're all the right places. Yeah. Now, at the moment the underlying owner of those call options, well, the retail side, and start seeing the time decay and they're deep in the profit, people started closing those positions. As they close the position, the dealer exposure also reduces. So now they don't need to own so many underlying stocks, tech stocks, NASDAQ, to maintain their hedge. And they probably have to buy back their hedge, meaning they now be selling down their long positions in the hedge. So that resulted in quite a positioning-related correction in the last couple of days. I'm glad to say that since then and yesterday, things have come, and we've seen a lot of deep buyers who's fundamentally real money, longer-term money. We've seen a lot of interest from the professional space that people are buying the dip, and the market bounced back quite substantially. So again, nothing economic-driven, nothing political-driven. Like you said, it's just positioning.
Positioning, yeah, indeed. But it's a good explanation, because I think people worried it's about the election coming up already, or it's about more economic matters, like vaccines. There was some bad vaccine news, right, from the AstraZeneca Oxford study, because they had to stop it because someone got an illness, right? So that obviously drove down their stock price a little bit. But again, these things happen when you want to also come up with a new and unique vaccine as well, right?
Yes.
So thanks, Freddy, for that. Let's go straight into some questions from our listeners. And for everyone who is new to the show, if you would like to ask a question to both Freddy and myself, please feel free to put them in the comment section below, and our team will pick them up so that we can feature you here as well. But let's talk about the question by Blue and Yellow Fire. He says, hey, Freddy, given the fact that StashAway's ERAA has a valuation pillar, will ERAA decrease the target allocation of ETFs whose prices have already risen by a large amount? He's saying the example of his is, obviously, we just talked about tech, right? So KWEB, which is a Chinese tech ETF, as well as XLY, they've risen over 20% just in the last 2 to 3 months, right? So would we be decreasing that allocation? And if not, what's the reasoning behind it?
I think before looking at a specific tree in the forest, before I get into that, we got to think about it as a portfolio overall strategy first. That's how we operate. And if you remember, in May, we reoptimized these portfolios with an all-weather strategy. So in summary, we ring-fence your portfolio insurance. We beef up the defenses with more gold and more international protective assets, rather than, and also we reduces the US dollar exposure to very neutral levels because of the massive printing done by the Fed that has a strong risk of depreciating that paper, right? So we make a number of adjustments that's very strategic and medium to long-term in nature. So at the overall level, we have done that. Now, at the individual ETFs or asset class level, yes, if our valuation adjustments start flagging a particular ETFs, that's very overvalued versus the factors that it trades, not just based on price itself, then we'll make the adjustment. So in this case, you may wonder why Quape, KWEB, and some of the tech-related names that's going up, why are we not changing it? Well, it's because the economic numbers are rebounding. In particular, leading economic index published by the Conference Board, the year-on-year change has gone from minus 11 percentage point now, is rebounded to minus 6.8. There's been a lot of sort of signals coming in that's even the traffic volume is rebounding back up. Things are just started to settle, right? The impact of the COVID situation is toying. We're no longer in a full-scale lockdown. So taking that into account, taking also central bank stimulus into account, which we look at interest rate movements, we also look at inflation, right? So overall is looking at all the factors. The factors are also moving. It's not like the factors are not moving. And so in summary, the factors are pointing to a better word than before. And yes, US technology, which we do not really have a lot of allocations on our platform at the moment. And we chose the Chinese innovations because relatively the Chinese side versus their own fundamentals, they are not as overvalued as that. Actually, they're quite fair. They're getting towards a slightly overvalued situation, but there was no sign of mean reverting behavior that it will crash and burn. So that's why we also keep that in mind, that you're tracing the factors as well. You're not just looking at prices.
Yeah, no, I agree. And again, this is what comes back to Freddy preaching a lot of times, right? Also the longer term, right? So we don't want to be a trading platform either, Freddy, right? So looking at this decisions when you do the reoptimization on our platform, it's a play that is not just for the next 2 months, right? It's something that you...
Yeah, I mean, I recall we had the first reoptimization in December 2017. We bought Go to our full allocations, and when it was 12,042. But that was a strategic midterm need and move based on valuations. And to today, we still have it. In fact, we raised allocations back in May. And we are now, 1940, I believe. And so it's we take this strategic long-term move. So prices going up doesn't mean strategically you are overvalued. You've got to look at it versus the economic cycle, versus the factors you track. So it is a proprietary algorithm. We understand, but there's some logic behind it.
Yeah. And let's go with the last question for today then. German he was saying, hey, Freddy, are there any safe havens, right, which I can park my capital currently with? Because he's saying, we already talked about some of the topics already today. People are saying imminent crash. We kind of talked about that already. We don't need to get into that much.
Well, I would say this, it depends on how you look at it. Safe haven by geography, but where do you want to park the money? If you want to park it in the stock markets, and the country indices are all correlated. If you want to park your cash in a bank, I think Singapore is safe. We have deposit insurance, and some people prefer another country, but so those things don't really matter because they're safe haven in nature, because by nature of the assets. So I would say that, however, in my opinion, the greatest safe haven for investors is to create a global and diversified multi-asset portfolio that really takes into account longer-term economic trends, that matches the risk level that you should be, that wouldn't make you nervous when market corrects, that makes you stay in the game, and has all the right factors being considered by by the strategy. So that's what we're trying to deliver. And so the definition of safe haven, I really think it depends.
Yeah, no, it makes perfect sense, I think. So thank you for that, Freddy. For everyone else, we also have a couple live webinars coming up over the next few weeks. In Singapore, we have our investment basics seminar on the 23rd of September. It's a Wednesday. It's from 7 to 8:30 p.m. So if you like to listen to this, learn more about investments, you can sign up on our website. There's also a link down in the show notes. In Malaysia, on the 17th of September, we actually have the same event. So also investment basics seminar for our Malaysia audience, 6 to 7. Link in the show notes below. You can also go on our website, stashaway.my, to sign up as well. Thank you, Freddy, for being with us again today. To the audience, if you have any other follow-up questions, please feel free to put them in the show note, in the comment section below, and Freddy and myself will pick them up over the next few weeks. Otherwise, everyone have a wonderful rest of your week. Bye-bye. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.